Hello, Doug.
Hello, Sean.
So today you wanted to talk about the price of getting a mortgage is going up.
Right.
The closing costs.
Yep. And in this market right now, we would like to have as many ways to spur on the market so that values hold and that there's not as many problems with people trying to sell their homes and not being able to get their mortgage paid off. And one of the aspects of that is how easy it is for people to get mortgages.
Okay.
The more people that can get mortgages, of course, and they're buyers, the better the market will be. So unfortunately, Fannie Mae and Freddie Mac, who are buy 75% of the loans that are originated in the United States, they have changed their policies on how much it's going to cost you and I and everybody that's buying a home to get a mortgage.
Okay. And so closing costs at the time of purchasing a house.
At the time you purchase a house, your closing costs are going up. And what's happening is that, number one, just to let you know, if the term out there is called conventional financing, 75% of the conventional loans are purchased by Fannie Mae, Freddie Mac. So now they've changed the way they're considering risky buyers.
Okay.
Risky borrowers. Because in their language, you're a buyer, but you're mostly a borrower because you're borrowing the money. Okay. So the risk-based pricing was always there to allow people who that had risky credit or to charge more to offset the cost of that increased risk. Well, now they're changing the definition of what they think a risk is. So here's an example from the memo that they sent out. If you have an 800 FICO score on your credit, which is really good.
Yeah, really good credit.
Right. And you're putting just shy of 25% down. In other words, they call it a 76% loan-to-value ratio. So that's just a little bit less than 25% down. Okay. They're going to charge you a 0.25% hit on your mortgage at the time of closing. So that amounts to, on a $400,000 purchase, close to $1,000 extra. Okay. Here's another example. If you have a 670 score, 679 FICO score, just under 680, and you're putting almost 20% down, 79% loan to value, they're going to tack on 2.75% to the cost of getting that mortgage, which is a whole lot of money. I think that's right around $11,000 in a $400,000 purchase. Okay. So it used to be that they were rewarding people that were not risky by getting the cheapest loans, the loans at a very cheap rate, or cost anyway, and charging people that are riskier. So now they're changing the definitions of riskier. Why, we don't know. It must have a function of the foreclosures that are happening out there. And they're trying to recoup,
and of their own budgets?
Yeah, and they're trying to recoup some of their lost investments. But right now, the way Fannie Mae and Freddie Mac are looking at it, they're considering just about everybody at risk that wants to borrow money, and that isn't going to help our housing economy out at all. So I guess the moral of the story is be prepared to pay more for your mortgages when you go through, but it wouldn't hurt to contact somebody that you know and let them know what you feel about this. If you're thinking about buying a home, saying, I understand that the costs of getting a mortgage are going up, why is this happening? And so I'm talking about maybe people that are like your representatives or senators, and let them know this is happening, because this is not going to be good for the market. What they're doing is they're going to be basically forcing able-bodied buyers into the rental market. Right, because it's going to cost more, even more in closing costs. Yeah, and more in closing costs, and sellers don't have a lot to pay to help the buyers out, and the buyers don't have.
But also, moral of the story: if you are a buyer, the more money you have down, and the better your credit score,
the better.
I mean, it could really make a difference in how much you pay in closing costs now.
Right, exactly. So,
if that means you have to look in a little bit lower price range, or you have to take a few extra months to increase your credit score.
Exactly.
Right.
Right, and so you know, hopefully they'll change their rulings on this, but for now that's what we've got to look forward to. So I think if you acted right away and bought, I think the old guidelines are still in effect. There must be a cutoff date, like I'm thinking the end of January, maybe the end of February of this year of 2011. But they're coming down the line, and if they're not already in effect, they will be soon. So maybe you can try to beat some of this stuff and get in before that happens.
Okay, well, thanks for the info, Dad, for keeping up on that.
You bet. Good luck, everybody.
Bye.
Yeah, bye-bye.